this reflects what we've been talking about. Things didn't change all that much.
Hello, gentlemen. I hope you guys are ready to tackle the most pressing thing I can find today, which is the GDP report that came in this morning. Down on an annual basis, 0.3%, which is the worst rate we've had since 2022. So, Joe, what's your take on that?
It means nothing. Literally, it may mean absolutely nothing. First of all, it is backward looking. So we're looking at the first quarter, which the tariffs, in particular, if that's what everybody's worried about, which is what everybody's worried about, didn't kick in until April 2nd. And the peel back reduction was on April 8th, a week later. So, um, what happened in the first quarter? Well, what happened in the first quarter was that it was distorted by anticipation of tariffs. But when you get down to the nitty gritty, it really didn't actually. This reflects what we've been talking about. Things didn't change all that much. Yeah, there were some big changes in things like inventory and net import or net exports, things like that. But all of that was about front running the tariffs. When you dig into the details, real final sales to domestic purchasers, which is really kind of what we're looking at here, it's like a 3%. It really final sales. Actually, it was be an exact number here. Let's not guess at it. Let's see. Real final sales to domestic purchasers. That's current dollar. That was a 6.2. Let's see. Final sales. Uh, Domestic purchases, final sales domestic are 2.3. It's down a little bit from last quarter. Last quarter was 3%, but 2.3 is not bad. It's not any, doesn't say anything about what's going to happen in the second quarter or the third quarter. Um, so let's talk about the thing that everybody's going to get confused about. Everybody's going to get confused and say this was all about imports in anticipation of tariffs. Yes, sort of. Not exactly, but sort of. Um, Again, Peter Navarro, who is I cannot believe that this guy is in any way, shape, or form close to the levers of power because he's an idiot. And I'm not going to pull any punches. He's a moron. All right. He comes out this morning and says this is because we imported all this stuff and imports subtract from GDP. Yeah, that's not exactly true. Let's talk about that for a second. I'm going to go over this for the 9,060th time. Imports do not subtract from GDP. They are a subtraction in the GDP equation because imports are included in consumption and investment. We're trying to get gross domestic product, not gross product from everywhere in the world. So to get domestic, you have to subtract out what we import. And so that's what we do. It doesn't mean that imports are bad. It doesn't mean that imports make our economy worse. It doesn't mean any of that. So just forget that out. Just get that out of your head. So what does it mean? We did import a lot of stuff in the first quarter because we were worried about tariffs. Companies were importing a lot of things. And what happened? Well, it went into inventory. Vast majority of it went into inventory. Guess what inventory is? Inventory is part of the investment equation, investment piece of the GDP equation. So it goes into the inventory and it comes out on net exports. It's a wash. It doesn't mean anything. It means squat. It means nothing. So why did GDP come in weak? Let's take a look at some of the details. If you look at some of the details, durable goods consumption down 3.4%. That was focused on motor vehicles and parts. Why? I really don't know. Quite frankly, I thought that we would see we've seen an increase in sales over the last month or so because they were worried about tariffs, and we're probably seeing some more now. So maybe it just didn't kick in yet. Price increases on automobiles probably won't come for another few months because they do have inventory on the ground. But those things will start to hit as the tariffs start to hit and production starts to get hit because of that. It's not happening yet. So durable goods was a big subtractor on GDP in the first quarter. What does that mean? Not a whole lot, honestly. I mean, those numbers go up and down a lot. Last quarter, it was a plus 12.4. Go back to quarter one, 2024, and it was a minus 1.8. Durable goods orders are volatile. So that's part of what happened in the first quarter was durable goods orders were down. What else happened? Federal government spending was down in the quarter, mostly national defense, believe it or not. That was a -8% rate. But if you look at how much it shaved off of the GDP number, you get to that motor vehicles and parts that shaved 0.3% off of GDP in the quarter. You also had an interesting one: federal final consumption expenditures of nonprofit institutions -0.31. I'm assuming that it has a lot to do with the Trump administration canceling a lot of grants and so forth that they did in the first quarter with Doge. But a -0.31, that's a direct impact on GDP from Doge, I would say. What else did we get here that was interesting? Net exports obviously was a negative, but -4.8. Change in private inventories was a +2.25. It wasn't quite a full offset, but pretty damn close. What else did we get? It was really about it. I mean, there really wasn't anything that really jumped out at me except for that durable goods number, that and the nonprofit number. Other than that, I don't know. Look, we were running at 2%. We've said this before. When you're running GDP at 2% growth rate, you knock zero point 0.6 off in two categories, and suddenly you're at 1.4. And it just takes a little bit of maneuvering, and suddenly you're at a minus zero point 0.3. It just doesn't. You don't have a lot of room for error. Put it that way. I would say too, by the way, just be very careful about taking this number to the bank. We've talked about this many, 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 many times. These numbers get revised. And in fact, when they released these first quarter GDP, when they were the first version of GDP for a quarter, they're missing most of the third month worth of data. They're guessing. They have no idea what the third month looks like. Not yet, anyway, but they will in the second revision, the third revision. It'll get changed. I'll just make a guess right now and say that you'll probably see this number revised higher, mostly because of inventories, I think, but I don't know. But that's a guess. I really don't have it's a total guess based on kind of what I've seen going on in the real world, but there's no way to really know. But the bottom line is this number doesn't mean anything, and nobody, and I mean nobody, should be making any trades in their account based on what happened with the GDP number from last quarter. You need to be thinking about what GDP is going to do for next quarter, and that's where we have it's quite murky. Let's just put it that way.
So, Steve, this goes along with what we talked about, I think, on Monday. Much ado about nothing. And the markets today did what you would expect, dropped off a bunch, close to 700 points. And I looked a minute ago, it's back up around 250. So, yeah, okay.
Yeah, I'm just kind of almost shaking my head here because I got a checklist. I had like 5 or 6 points. They were good points I was going to make. And Joe, check, 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 check. I got nothing. He had pretty much everything. So I'll just re-emphasize a few things. Yeah, if you're running at really weak GDP, it doesn't take too much to put you in trouble, and that's one of the issues we have this with this economy is growth so weak that you do have to be worried. Um, but the other thing I'd also hit too is compare what he just said to what the headlines are. And if you're seeing headlines not matching up, find some new headlines because coverage is just bad. Um, and then the other thing I would say is screw it, I'm just going to pivot. I think like the ADP payroll search data was actually more meaningful to me, which actually showed an unexpectedly slowdown in hires. That kind of goes to the issue we have with uncertainty in the economy, businesses being uncertain what's going on with changes in policy, specifically payrolls, and that may be causing them to delay hires. So even though that wasn't getting the headlines, I'd actually pivot to that data as being more trustworthy, more recent, and probably giving you a better pulse on what's going on, but it's not a huge data point. But Joe didn't give me anything else to talk about, so I'm going to talk about ADP payrolls instead.
Well, it's Joe, you're just a very complete guy. You already covered all that stuff. So would it be a safe assumption until these things are revised that we're better off watching reruns of our favorite TV show?
Well, I am actually watching reruns right now of Northern Exposure, one of my favorite shows of all time. So you might check that one out. It's on Amazon Prime. Look, I actually, I'm with Steve on this. ADP, and we got an employment report on Friday. We got some consumer consumption numbers this morning. But again, consumption numbers this morning we're also skewed by this pre-tariff stuff, this idea that we're still dealing with the anticipation of tariffs. But you did get a JOLTS report this week too, the job openings and labor turnover survey, which also came in weak, which kind of points to what Steve is talking about. And I would also look to consumer confidence. Consumer confidence was awful. Man, consumer confidence fell to 86. That's a conference board, not the University of Michigan that we talk about a lot. Conference board down to 86. That baby's down there where let's see, I think we saw that in the financial crisis, and I think in 1990. Other than that, yeah, I don't have anything. You did get recessions around those times, obviously, but numbers down that low, by the way, yeah, those are actually usually buy signals because it doesn't get much worse than that. So, when you look at the data overall, look, we again, you got to think about this distortion from these tariffs. We got a Dallas Fed manufacturing index this week, a minus 35. Man, that's freaking awful. Yeah, but it was a plus number before and it fell off because people front running tariffs. So, and not only that, it is survey data. We're not talking hard data here. Look, you're gonna hear a lot of things, and you're already hearing a lot of things especially if you're on places like X or Twitter or whatever you want to call it. If you're in social media, you're going to see some things that are just it's propaganda. Let's be honest about what it is. It is total propaganda. So, for instance, there's this one floating around out there right now about how the port in Seattle there's nothing there. There's no ships. There's no nothing. Yeah, the picture that they show is of a portion of the Seattle port that was closed 2 years ago. It means nothing. Most of that traffic in Seattle actually has been shifted to Tacoma. It doesn't mean a thing, and people are using it. I don't know why they do that. Why show something that is false? Why do people do that? Well, I don't know. They've got their reasons, I guess. But you can't pay attention to this stuff. It's going to drive you nuts. There is a drop off in some port traffic in LA and in Tacoma too. There's also some drop off in trucking traffic. And you know what? Not shocking at all. It was up before in the anticipation of the tariffs. Now that the tariffs are in place, of course it's going to drop off because all these companies built up inventory before. So what does that mean? Well, you get this big change in inventory in the first quarter. You'll get the opposite in the second quarter and the third quarter. So what? It doesn't mean anything. That's my point. Listen, I don't want to minimize this stuff. We think the tariffs are negative for the economy. We don't know how negative. We really don't. Nobody knows. There's lots of economists out there plugging numbers into their models and trying to come up with a number. Nobody has a clue. We don't really know. There's so many unknowns. So look, again, watch the markets. That's what we do. We have seen a drop off in interest rates on the nominal side and the real side. It's not huge. So what the market is saying is that there's a slowdown. It doesn't say there's a recession. It doesn't say it's really a bad slowdown. It's just a minor slowdown. You've gone from 470 down to 420. It's a 50 basis point drop in the yield, in the nominal yield. You haven't had quite that much in the real yield. So is growth going to come in some? Yeah, it looks like. And we don't know how much because we don't know what the total effect of the tariffs is going to be. We don't know what trade deals are going to be. We don't know what's going to happen with tax policy. There's way too many things to be unknown right now to predict what GDP is going to be over the next couple of quarters. But right now, this report, I don't know. I'm not going to pay too much attention to it. Like Bob said, market was down 700 at the open. People get all excited about this stuff. I think we're down a couple hundred points now. Last I checked, we were down a very small fraction on the day for our accounts. It's a non-event. So don't get too excited about it, and don't let people tell you it's something that it's not.
All right, guys, thanks for setting the record straight. And just in case you're looking for more information, be sure to sign up for our newsletter.